So let's bring on board Kunal as well as Nooresh and figure out what they're making of the trading day so far. Kunal, first a word on the index. The fact that we even breached 19,500 today, now seeing a bit of a bounce coming in from those levels. What does that indicate?
Good afternoon, Aisha. So, I would probably say that it's a two different kind of a market. One is where large cap stocks, very few select large cap names like, you mentioned Reliance Industries, HDFC Bank, ICICI Bank, and maybe ITC. I think if we can put that into the list, these stocks are going into their own trajectory of downward trend. But on the other hand, mid caps, small caps, even the most of the FNO stocks are showing signs of durable recovery, bounce on a periodic basis, as well as breakouts for many of the other mid-cap names. So that's a different market altogether. Now, whether the index going down 150 odd points makes the mid-cap portfolios a lot more dented, I don't believe so, because even on a day like today, I think many of the mid-cap portfolios are actually doing pretty well for themselves. So the sell-off in the market is not pinching short-term investors, at least looking at the market construct right now. On the index trends, I would still believe that till the time we don't break past about 19,720, 730 mark, which was the previous week high, the view as well as the bias for the index would remain on the downside.
Oh, well, yes, the bias will remain on the downside, at least till the time we don't find that bottom at around 19,250, 19,300 thereabouts. But Nooresh, the point that even Kunal was making is the individual portfolios which aren't bleeding at the moment because your broader markets continue to do quite well. And 2-3 such names are Mahanagar Gas, which is up a good 8%. You also have Metro Brands, which is actually doing okay with a 10-11% gain. Safaris have around 6%. What do you make of some of these large mid-cap names per se?
So overall, it is very clear that the index is in a different trend. Stocks are in a different trend. So for the last few days, Metro Brands was closer to the 52-week highs, was making a close to that breakout move above 1100. The stock has moved up 10-15%. Same is the case with a lot of names across the board. So even if you go in the larger cap names, you have an Axis Bank closer to 52-week high and an all-time high. And you have a Kotak Bank and a HDFC Bank closer to 52-week lows. You have a Federal Bank which is at 52-week highs and all-time highs. So there is a divergent trend across the market caps, across the sectors itself. So overall, it clearly tells you on a day when the Nifty is down 100 points, the small cap index is up almost 0.5%, the mid cap index is in the positive. It's time to be more stock specific rather than to focus on the index. On the index, the only thing I would be watching out for is whenever we break 19,200 or 19,800, that's the time where the momentum shifts in a major way.
Okay, let's see when that momentum does shift. We also have Daljeet Singh Kohli joining us on the show. Daljeet, let's begin by discussing the PSU banking names because they continue to buck the trend and do quite well for themselves in an otherwise weak market. Which are the names that come to mind which still might have some steam left?
Yeah, good afternoon. We are very positive on PSU banks. We hold some of them in our portfolio. Now, names I cannot take because of the compliance reasons, but suffice to say that we have almost 4 or 5 of them in our portfolio. So, and they're all well-known names, right? Because of these PSU banks, actually the portfolio is tilted towards large cap now. So, though our mandate is mostly on the mid and small caps. So, we believe that the asset quality which these banks have been maintaining, that continues to remain robust, and this quarter number also should show that. Plus, there is a growth. So, system-wise growth is there, and the asset quality is maintained. Both these things will help them in maintaining their valuation. Still, some of these banks are trading at lower than their historical averages. So, which means again the valuation comfort is also there. So, net PSU banks continue to remain. We remain constructive on them.
Banks have to lead the way forward for the equity markets, and HDFC Bank, Kotak, etc. are not participating. What within PSBs would you bet to go long on?
So I'll still stick to the formidable ones over here, the likes of Bank of Baroda, Canara Bank. They are the ones which look extremely strong. So they'll be the first preferred names amongst the PSU banking names. I think even SBI is also showing signs of recovery. So I think the stock is now nearing towards that 600 mark, which has been a huge psychological as well as a major resistance for the stock in terms of the technical chart structure. So I think once that 600 mark is taken out, I would believe SBI could also start to participate, more or less in line with many of the other PSU banking stocks, the mid-cap ones specifically. I would still not venture on to the high beta pocket of the mid-cap or the mid-cap and the small-cap end of the PSU banking stocks, because many of these stocks are now getting into a frothy zone in terms of indicators. So I would still stick to the formidable ones. Bank of Baroda, Canara Bank would be the preferred names, and hopefully SBI about that 600 mark.
Okay, point taken. Daljeet, have you looked at some of the latest IPO issuances that have come in? Do you see the value available on the table? Because the likes of JSW Infrastructure have seen quite a good response even in terms of subscription and now listing gains of over 30%.
Yes, it is probably because after a very long time we have seen a issue coming from that major group, and also it is in the area which is of interest to almost everybody right now. Infrastructure, ports, we know that major growth is planned for the ports and this kind of area. So obviously there is a lot of interest for this sector and for the group also. That's why it has seen such a good response. We have not taken it in our portfolio as of now. We tend to wait for an IPO for a few months to let it stabilize, because during the initial days you would normally find that there are some anchor investors, there are some other reasons for the stock to perform, and then over a period of time all those things, when that noise gets settled down, that time we take a call, because we are taking a call for 3 years, so we are not there for 3-6 months, and then therefore it is better to wait for the company to perform for 1 or 2 quarters and let this froth from these new investors go out, then you take a call. So as a policy, we don't invest immediately in an IPO.
Sure. Okay, talking about JSW Infra, my colleague Ankur Mishra managed to catch Sachin Jindal on the sidelines of this, mega listing today, and here's what he told us.
I think listing is just the beginning, because this now many shareholders will participate, and as I was saying, that this will bring a lot of, let's say, pressure on the management, or shall I say more ambitious plans can be made now, because India is a hugely growing country, and infrastructure is the one which really is needed for this country to take our country to the 10 trillion and then to the developed economy stage.
Right.
Infrastructure will play a very, very important role, and that's where JSW Infrastructure will play its role.
It took 13 years from the last listing to this listing. Many of the participants were saying now the listing time should be reduced. Which is the next company you think will be on the block, and will it be reduced now?
No, we have 2-3 companies in the pipeline which are in the incubation stage at the moment, like JSW Cement, JSW Paints, and similar couple of other companies. So let's see. It won't be that delayed. It would be much faster, because the country is also growing faster.
Right.
So I think we will see next IPOs sooner than this one.
One last question. You mentioned about reducing cost and a huge potential for especially JSW Infrastructure. What should be the strategy for doing the same?
Well, as you make your infrastructure more efficient, and transportation cost comes down and volumes can grow up, the cost will come down. India has to bring down its logistics cost, and it can only happen through better infrastructure, better planning, and that is where we believe that JSW Infrastructure will play its role.
Oh, well, yes, the JSW Group has been playing a crucial role, and going forward as well, they plan to play a big part in the development of infrastructure in the country as well. But Kunal, I wanted your take regarding a couple of counters which are buzzing away. Take a look at the volumes on Jyoti Labs. That one has suddenly seen quite a bit of spike, and also add PNB Housing to that list, a 10% surge.
Yeah, Jyoti Labs is something which I've been tracking, of late specifically. The stock has been looking very, very consistent on the chart. So, there are a few mid-cap stocks which are high beta, which tend to move up into a, short burst of momentum and then go into consolidation. Jyoti Labs is not one of those stocks. It's in fact more of a consistent name. The stock, even in the last 2 or 3 years, has risen up from, I think 2021, the stock was almost at 120 odd rupees, moved up to 200 in 2022. And then from 200, the stock is now almost at that 400 levels, Jyoti Labs. So looks very attractive, even at current levels of 398, 400. PNB Housing Finance, on the other hand, that's a stock which is very, very high beta in nature. So I remember, I think last week or last month, the stock had shown a strong 10% plus kind of an upward move. Post that, it had seen a sharp correction which lasted for I think 1 or 2 weeks, and the stock had corrected from 720 levels to 650 mark. So I would probably believe that PNB Housing is a stock which could be bought into corrections, but Jyoti Lab, I think even on breakout, should be bought into.
Okay, that's the take coming in on PNB Housing. Some of the names which we must bring out is definitely Vedanta. Daljeet, wanted to get your take in on this. Given the kind of incessant restructuring that we've seen at the group level, what is it that you're making now of this demerger?
So first, the disclosure, we don't own this stock, and we normally don't talk about the stock specifics, but because we don't own it, so there's no harm talking about it. For me, it is more like a debt management exercise, less of any value unlocking or what they are talking about. We have seen the same exercise done in an opposite manner a few years back when they demerged, when they merged all of these companies into one, and that time also the rationale was this only, that it will create more value. And after 6-7 years, we are doing the opposite, exactly opposite of that. I think it's mainly to manage their debt, which is purely out of whack now. So they are trying to do some things in order to specify maybe the bankers, maybe the institutions, and something of that kind. In any case, it will take 12 to 15 months, and it will require a lot of permissions from various stakeholders. So which means that for a retail investor, I think it will be a very long haul when you can actually realize any major benefit out of this exercise. I would refrain from buying or staying in this company. In metal pack, we are very positive. We already hold 3 companies in metals pack, and we think that probably there are much better options available in the metal pack. One should look at that.
Okay, so a lot of opportunities, and one should look at those opportunities. In fact, let's take this opportunity to take a small breather on the show as well. But as we do that, listen in to the slice of conversation we had with Gautam Shah, because he's also raising in a bit of a red flag, saying that there's a risk of sentiment on board, and that's why he prefers to be in spaces like IT, pharma and auto.
So we love IT. I think we've been a big bull on the entire IT pack for a while now. We maintain that stance. And I feel in a difficult market environment, IT will stand out. And this 31,000, 31,500 area is an important support. Secondly, I think the sector that we feel could make a big comeback is pharma. I think it's very clear looking at Friday's action that the market has got into risk off mode. For the last 4 months, we were in risk on mode. So everything and anything that was high beta did well. Now I think we've moved to risk off mode, and I think pharma could be a sector that could lead the market move from here in terms of strength. Sectors doing well, and I do see the pharma index appreciating 15% from here. So our working target is about 17,000. So these two spaces look great. And autos, I know it's considered high beta, but if you really marry in the fundamentals and the technicals, I feel auto has the potential to be the big structural story for the next 6 to 12 months as well. Now, if you have a 3-year view, I'm still very comfortable to hold on to PSU stocks, because I think they'll do exceedingly well and they will outperform the benchmark indices by a wide margin. So in that sense, we love the setup of NTPC, Coal India, Power Grid, ONGC. I think it will do great things over a 3-year period.
Back with closing trades right here in ET now. Still under pressure, while we've definitely seen a recovery and we're off that 19,500 level. Climbing a little bit, 129 points lower still as we speak. It's the Adani names which are holding out quite okay. Adani Ports being one such case in point. And then, of course, there's Bajaj Finance as well, holding out by 1.5%. I think the fundraising is slated for this week itself. There's Axis, which is flat. There's Bharti, which is flat. But besides that, you're not seeing much of a move really come in the rest of the heavyweights. Sectorally, of course, it's infrastructure names which are holding out well. And I mean, talking about infrastructure, how can we not talk about the railway names? IRCTC, let's just bring up that intraday graph for you, because I think it's climbed up that 700 mark after a very long time. Kunal, am I right?
Yes, it's quite a long time for IRCTC.
So, I mean, is it now in some sort of momentum? Is that what a above 700 indicate?
Yeah, it does indicate that the stock is back in momentum, and I think the good part is that many of the other railway stocks, the ones which have been doing exceptionally well over the last 1 or 2 years, RVNL, etc. Many of these stocks are actually nowhere close to their previous swing highs. So that makes the case for IRCTC as a solitary stock to start showing signs of momentum, that it's not being dependent on the other railway stocks to start performing. In fact, the best part about the chart is even in the last 1 or 2 weeks of price correction for IRCTC from its previous swing highs, the stock had held on to its 50-day moving average, and now the slope of this 50 DM has started to show signs of increase. Now this could probably mean that the stock may not just break past about the previous highs of 750-60 mark, but possibly this could be a start of a fresh medium-term uptrend for IRCTC. So I think even at current levels of 700, 702 where the stock is trading, I would be keen to initiate a fresh buy and look out for at least that 755 as a first breakout target for the stock.
Okay, so that's a breakout target that one is watching out for as far as IRCTC is concerned. But Daljeet, your take regarding some of these new age tech names. Zomato is finally seeing a bit of the upside, but it's now past the level of 100 comfortably. But you have Nykas and the others which continue to languish. Your view for the entire space?
We continue to avoid them as of now, mainly because we want to see some more numbers coming in. A lot of ESOP related and many one-offs, extraordinary items, all these things still continue with many of these companies, although they are very clearly now on the path to profitability. But let them reach that profitability, then we will probably look at them. As of now, we are playing this theme through some of the IT-enabled service providers. So maybe something like a lounge service provider or something like a marketing help kind of thing with the companies which provide the marketing aid. So those kind of service providers, we have some of them in our portfolios. But these pure play new age technology companies, we are still avoiding.
The other thing, of course, is, yes, tremors felt in Delhi and NCR. We've already heard that from all of our team in New Delhi. Yet to see what's been the quantum and what's been the epicenter. But we will get that info in just a short while from now. As of now, there's just been one elongated tremor that's been felt, and a strong one at that, just going by what people in Delhi have experienced. But Daljeet, end of the week, we'll have the monetary policy outcome as well. What's the expectation there?
So we are expecting that probably status quo will be maintained. Though the tone might be slightly more on the hawkish side, because the pressures from, especially there's not too much of pressure from inside, but from outside, external pressure is too much. The way US bond yields are going and the way they're the talk there that higher for longer and interest rates can go up further from there. Those things will probably weigh on the RBI's mind. So we might see some bit of hawkishness coming from RBI also, although we don't expect any change in the interest rates, as well as policy stance also will probably remain the same.
Okay, so that's the take coming in as far as what to expect from the meeting later in the week as well. But within the auto pack, Nooresh, which are your top bets now? Because very interesting that the numbers weren't as bad, but the stocks are reacting in a very weak way. Were the charts telling you that these stocks are in for a bit of a reversal and weak trend?
So overall, we are seeing very different trends across the board. So you have a TVS Motor which continues to surprise on the upside, just slowly and steadily gone up. But you have a Hero MotoCorp which just continues to be around 3,000 plus minus 100 points. So out here, the most better chart in terms of structure is Maruti, which has now any retest back to the 10,000 mark, which was the previous high in 2018, would be an interesting opportunity to buy around 10,000, 10,200. So that would be a top pick in that case. And Mahindra and Mahindra, if it sees another dip a little more, another 100 points lower, that could be interesting, closer to that 1450 mark.
Okay, that's that on the auto sales data. Let's also take stock of what else has been moving in the market. Of course, there's Vedanta. That is one stock which is seeing a nice follow through from the price action on Friday. And I think it was up in over 6% on Friday. Today, too, it's seeing an uptick of about 4%. Nooresh, do you identify a trade here, even as the stock languishes at its 52-week low?
So not really. The stock doesn't look interesting because there has been a lot of announcement. but the trend in the whole sector as well as the stock itself has been slowly and steadily lower. 240 is where I would expect it to top out in the near term. So if somebody is looking out for a trade, the trade is to go short closer to 240, 245 with a strict stop loss.
Okay, so that's a take coming in on Vedanta as well. What else is happening in the market? Well, it's Metro Brands, which is up a good 10%. PNB Housing is doing well. Mahanagar Gas is fairly excited with that 8% move. Safari Industries is your other gainer as well. On the losing side, however, it's Cyan DLM, which is down 5%. And then MCX India 2 is seeing a cut of almost 4 to 5%. But since we are talking about the auto space, listen into the commentary coming in from Shashank Srivastava of Maruti as well as the analyst Kumar Rakesh, because what they are talking about is the inventory build-up in the system. Of course, it usually happens ahead of the festive season, but now October will be very crucial in terms of liquidation of that inventory. Listen into their commentaries.
Always the start of festive season in India is 17th August, and in automobile industry we take the end of that season as the Bhai Dooj, which is 2 days after the Diwali. That's on 14th November. So if you take this period, and this period is about 87 days in this year, keeps varying of course. Last year it was 71 days. Roughly 23 to 26% of the annual sale happens in this period. And in which case, since the industry is looking at a 40 lakh sale this year, 41 lakh sale, it's expected that in this festive season this year, 1 million plus vehicles will be sold. Inventory level at the moment for the industry around 331,000, which is around 30 days of stock. Not very high. That seems to be the normal inventory pre-COVID. But of course, in the last 3 years, we haven't seen this type of inventory build up. In fact, 331,000 was touched 5 years back in September of 2018. So it is obviously the inventory level at somewhat at a high level.
Right. Okay, that's the take coming in on Maruti. In the meantime, just taking stock of what else has been holding out in the market and what's not. Let's just bring up some of the other, laggards in trade. While sure enough, the key pressure points are indeed what you're seeing with Reliance Industries as well as HDFC Bank. But Anisha just flagged off the auto components. Look at Eicher Motors. That's down 3.5% in trade right now. Maruti is down a good 2.5%. And then, of course, Tata Motors as well has fallen by about almost 1.6% or so. Along with HDFC Bank, by the way, there's ICICI Bank as well, which is down 1%. And then, of course, the IT names continue to weigh heavy. TCS, Infosys, both are laggards as we speak right now. Daljeet, time to buy IT yet or not quite?
I think after the results, we will see that. We have some small amount of IT, very small allocation as of now. Mainstream IT, the two enabled services I talked, we already have a good allocation there. But the mainstream IT, we would like to wait for this quarter number. I think the way the commentary from Accenture was that probably things will take much longer than what many of the analysts and what the street was expecting, that revival will happen sooner. And I think everybody was going that H2 of this year will be much better, but that doesn't seem to be the case. So maybe after the quarter 2 numbers, once the managements come and give their commentary, then we'll have a little more idea about it. Also the pressure from US macroeconomy, the way people are talking about higher interest rates, higher yields, that will also weigh upon them. So I think better would be that right now, just keep it under your watch and let the time pass. Let's see that how things improve. If there are any signs of revival, you will get enough opportunity to buy. So there's no hurry to buy, but it will be definitely in the radar.
Hurry to buy IT, but I just want your take regarding HDFC Bank as well. And Daljeet, I appreciate that you can't talk very stock specific, but given the fact it's a very large way on the banking index, there are some flashes for you also on the screen, wherein there is a source-based story talking about the revamp happening at the top level. It doesn't seem very structural in nature because the IT and digital functions have been brought under the wing of CEO directly. But other than that, I don't see a big operational change. But do you think something like this is now needed for HDFC Bank to completely overhaul their system and get the momentum back, or is just a so-called time-wise correction that perhaps the stock is going through?
Yeah, right now the stock is going through correction because there are a lot of changes happening, right? There's such a big merger which has happened. Obviously, it will take its time. There you cannot bridge that time gap by just saying that, oh, everything will be fine. So this is actually the right time for people like us who are long-term holders, that for them it is giving you an opportunity to buy, because in adverse situation only such kind of stocks will be available at reasonable valuation. Same stock you were willing to buy at 3 times, 4 times of book value, that is now available at 2 times, of because of the visibility of some news flow, some negative news flow around it. That is why you are getting it at half the valuation. So in fact, if those who have a very long-term view, definitely next 6 months nothing will happen, because structurally things will get merged, so ratios will get impacted. You will have adverse impact on all the ratios, you will have impact on the NIMs, etc. So which means that the stock is already building all those negatives in the pricing, right? And that is where the contrarian view will work, that if your assumption, our assumption is very clear, that the company, the management, the bank is capable of passing through this turmoil period, and once it comes out, it will be much better. So if that is the view, then obviously these negative things will give you an opportunity to keep adding slowly for a longer term investment.
Daljeet, great to have you on the show today. Thanks, as always, for taking the time out. Let's just take some closing trades as well on that note. And it's a consensus from both Kunal as well as Nooresh. Nooresh, you go first.
So that's a buy on State Bank of India. The stock is getting tightly banded in 580, 600 mark, about to break out, not far away from an all-time high of 620, 630. A lot of catch-up to be done. This could be the stock that breaks out over the next couple of sessions.
Kunal, any different levels on SBI?
I think it's pretty much the same. In fact, the stock, as I was mentioning, that the stock has a resistance closer to that 600 mark. I think it's now scaled past about that 600 levels, which means that the stock should start to get into a strong analytic momentum zone from here on. So very strong buy from my side as well.
Okay, on that note, let's take a very quick break. When we come back, the last half an hour of trade this afternoon.